Hi there, welcome to Kneppy Invest. Very excited to be bringing this video today on Telix Pharmaceuticals, looking at their Appendix 4C for the September quarter financial year 23. I believe it is financial year 23 because their calendar year and financial year are the same. So they just had their third quarter of the financial year. Their last quarter is the December quarter, and then they move into financial year 24. Now, I have high expectations in regards to this company. In fact, the market has high expectations in relation to Telix Pharmaceuticals. In fact, the market cap of this company is around $3 billion right now. So there is a lot of expectations priced in to this company right now. Now, for any company I do own, and for full disclosure purposes, I am a shareholder of this company, I do have expectations myself when it comes to quarters, when it comes to half year and full year results. And I came into Telix Pharmaceuticals September quarterly results with some expectations of receipts. And my low end of those expectations for receipts was $130 million. And this company hit my expectations. But obviously, because the share price did drop on that day by about 9%, something like that, obviously the market had higher expectations than I did. And that's why there was a little bit of pressure on the Telix Pharmaceuticals share price. But that does not mean the future of this company has changed one iota. And maybe I should have said the potential of this company hasn't changed one iota by the September quarter results. And that's the most important thing. This company has a lot of potential, and the potential, in my opinion, hasn't changed one bit. So what exactly does Telix Pharmaceuticals do? They are focused on the development and commercialization of diagnostic and therapeutical radiopharmaceuticals and associated medical devices. They have one product on market right now called Illuccix, and Illuccix has been approved by FDA, the TGA, which is the Australian Therapeutic Goods Administration, and by Health Canada. So Telix Pharmaceuticals is all about molecularly targeted radiation. And the reason why molecularly targeted radiation is, or potentially, really useful is that it is designed to destroy the target or the tumor target plus adjacent tumor and supportive cells. And this is actually called the bystander effect. Now, at this point in time, they are focused on imaging. So it's all about imaging. And then eventually, it looks like they'll be getting into therapy, using their IP to treat and maybe even cure cancer. So right now, it's all about prostate cancer. They're also focused on other sorts of cancer. So have a look at their pipeline. This company has a lot in their pipeline right now. That's another reason why I'm excited about the future of this company, is not only what they have in market right now, but also the potential of what they may have on market over the next 5, 10, 20 years. Now, a few facts in regards to Telix Pharmaceuticals. I already mentioned what this company does, molecularly targeted radiation. This is a biopharmaceutical company, and they are successful. They're generating cash flow, generating an incredible increase in receipts over time, which I will discuss in the next few slides. The company was founded 8 years ago in 2015 by Christian Berenbruck and Andreas Kluge. Sorry if I've totally butchered the pronunciation of your names, but I am a Western guy. We only have simple names like Michael and Smith, those sort of things. Company listed on the ASX 15th of November 2017. So not long after they were founded, they then listed, and the current CEO is Christian, and he also owns 7.2% of the company. Not only that, both co-founders combined own 14.4% of Telix Pharmaceuticals. So there is skin in the game. And because this company is valued right now at $3 billion, that's at a share price of $9.24. The co-founders have done really well just based off the valuation. But because, more than likely, they are really invested heavily into the success of this company over the next 5, 10, 20 years, that's another reason to be excited about this company, because there is skin in the game when it comes to Telix Pharmaceuticals. And the ticker code for this company is TLX. Before we have a look at the September quarter results for financial year 23, let's go back 1 year ago just to see how this company has performed over the past year. Now, 1 year ago, Telix Pharmaceuticals was not operating cash flow positive, but they were generating a significant increase at receipts at this point in time. And you know the receipts has started to take off when you compare receipts in this quarter to the first 9 months of this financial year. So the first 9 months, they only generated $52 million in receipts, but in this one quarter, they generated $44.5 million. So this is the time when Illuccix was being sold or started to be sold, and it was taking off. But the company was operating cash flow negative by $5.3 million in this quarter and $65 million for the first 9 months of the financial year. But they had a lot of cash on hand, $117.1 million of cash on hand. So there was a lot of wriggle room if they remained to be operating cash flow and free cash flow negative moving forward. And they didn't spend a lot of money on capital expenditure, $1.7 million in that. And also exchange rates are going to be very important for this company moving forward because they're selling their products in America. And they actually did gain $1.4 million from favorable exchange rates. Now on to how this company performed in the September quarter just past. I've already mentioned that I always have expectations. And my expectations for receipts for Telix Pharmeceuticals was between 130 million, and I was thinking 145 million could be possible. And receipts came in 130.7 million. So obviously the market didn't like these results because share price did fall about 9 or 10%. But the one thing I'd like to point out is even though I do have a target range for all companies, when it comes to receipts for the quarter, always have a bit of leeway because we just don't know changes in working capital. Was there an increase or decrease in trade payables, trade receivables, or inventory? We just don't know it unless the company specifies that. But the most important thing here is receipts of customers up big from 1 year ago. In fact, up $86 million from the September quarter last year. But the most important thing here is the company is operating cash flow positive. In fact, they're operating cash flow positive by $21.4 million in this quarter and $34.6 million for the first 9 months of the financial year. So this company has definitely hit that inflection point, and it hit that inflection point fast because of the staggering increase in receipts over the past year and a half. So cash on hand up to 137.4 million. So they're increasing their cash on hand, even though they have increased their spending. So receipts up $86 million. And because receipts increased a lot, they decided to ramp up their research and development, up $14 million. Product manufacturing and operating costs up $39 million. That's more because they're selling more product, that sort of thing. So I'm more focused on research and development, that they've really increased that. So they're preparing for future growth of the company. Another reason I'm excited about this company, advertising marketing flat, staff administration costs up $3.8 million. But I just want to focus on research and development. That's where they're putting more and more money into through their operating cash inflow. Now let's have a look at the receipts history for Telix Pharmeceuticals going back to the March quarter 2019. And to be honest with you, from March quarter 2019 all the way through to the March quarter 2022, receipts were going sideways, around about $1 million, give or take $100,000. So nothing too exciting there, but it was all about the potential of this company moving forward. And then they started selling Illuccix in the United States, and receipts just went berserk. That's probably the best way to say it. Receipts went from $990,000 in the December quarter 2 years ago to $130.7 million in the most recent quarter. In fact, in the last 5 quarters, receipts have grown from $5 million to $130.7 million, and they just keep growing quarter on quarter. Now, it'd be quite foolish to look at 2 quarters in isolation and think, well, receipts are starting to slow, like someone would have done in the March quarter of this year when receipts only went from 72 million to 83.6 million. But the trend is definitely there. Receipts are growing, and there's no end in sight to receipts growth path. Now, receipts won't grow at the same percentage rates as we saw 1 year ago, from 5.4 million to 44.5 million. But to believe they can grow at those percentage rates is absolutely foolish as well. So I like to look at numbers. So I want to see receipts growing at least $10 million per quarter, preferably between 20 and 30 million. So even though they only grew at $18 million in the last quarter, that's okay because the trend is still there if you look at the last 5 quarters. Now to the chart for Telix Pharmeceuticals, and if you just look at the chart, this is the daily chart, going back to August of last year, there is a bit of volatility when it comes to Telix Pharmeceuticals. That is understandable because of the market cap of this company and the rapid growth in receipts. And it's really hard to value this company right now, because if you're doing some sort of DCF, your inputs could range wildly from the worst case scenario to the best case scenario. In fact, I did this and I got a range in valuations between a couple of $100 million to over $50 billion, depending on the inputs I used and my expectations in regards to the future of this company. And simply put, the promise, the potential of this company is huge. And even though this company has a market cap of $3 billion, there is an argument that this company is undervalued based off the potential of this company. And that's why I believe there's a lot of volatility when it comes to this company's share price. We have seen this company share price rise rapidly over a short period of time. We saw that in April, May of this year. Share price went from $7 to a high of $12.50. And then we saw the share price suffer a fair bit when the company released their Appendix 4C for the September quarter. Share price dropped from about $11 down to below $8.50. Share price has rebounded over the past 2 weeks, but don't be surprised to see further volatility in this company's share price over the next few years. And that does lead to some opportunities. If you see the share price of this company drop significantly over a short period of time, and typically when the share price drops significantly over a short period of time, that negative sentiment doesn't last long if you look at the history of this company. And the main reason it doesn't last long is because of that potential and the possible future valuations this company might have in the future. And that's the main reason I'm holding Telix Pharmaceuticals for the long term. I don't know if this company will have, or the future of this company will be that best case scenario I laid out when I did the DCF. But I think when you do all the possible valuations of this company, there is an asymmetric outcome, and it's swayed heavily towards the upside when it comes to this company. That is all I have for a look at Telix Pharmaceuticals September quarter results for financial year 23, their Appendix 4C. It may not have met market expectations, but it met my expectations. And I thought this was a little bit of an overreaction from the market, but don't be surprised to see further volatility moving forward for this company because of their pipeline, because of their promise and potential in the future. If you have any questions about this company, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.